Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is August the 15th, 2024, and today I want to talk about the U.S. dollar, in particular the U.S. dollar index. The DXY is known by DXY. Type that into TradingView or your trading platform, and you will find a chart or information regarding that index. Now, the index is made up of a basket of world currencies dominated by the euro. I believe it's 57.6% of the euro. Now, that's based on, I guess, on worldwide trade. I'm not sure all the particulars, but this is how they measure the DXY, and it gives a strong indication of the strength of the US dollar in the world and its purchasing power and the trend in that where that's going to. So I'll show you three charts today. I'll start with the monthly chart, followed by the weekly, and then the daily chart. And each one of these charts, I have three moving averages. One is the 30, the 40, and the 50 period moving averages. So the monthly chart, these are measured in months. So the red is the 30, followed by the blue is the 40, and the green is the 50-month moving average. Now you can kind of see here how the moving averages are great indications of where trends are going and the strength of the trend. And right now, after we see the DXY index is well above the longer-term moving averages, signaling the strength of the trend. Now, all trends start to change at some point, and they don't always last. So what happens is we're starting to see a breakdown below this shorter term moving average, in this case a 30-month moving average. So what it is, it starts to send up some alarm bells, and makes you start bringing to your attention that this could be a trend change happening. We can see in the past where that breakdown's happened, and it really it can lead to a sell-off, relative sell-off really quickly. Let's look at the weekly chart here, and we can see here these moving averages have really been crossing over one another for the past year. What that indicates is and what it signals is the indecision of the marketplace as the trend is trending sideways, consolidating sideways as the buyers and sellers of these currencies fight for control of the trend. Well, we can see here the last 3 months, we've actually dropped down below these moving averages and making new lows for the year. And it's kind of signals that the trend is changing on the weekly time frame, and which might lead to a trend change on the monthly as well. So we want to be aware of those moving averages and understanding where the trend could be going. When we look at the daily chart, it certainly looks more bullish, more bearish than the rest of them. And you can see here we're well below the moving averages on the daily time frame. So all changes start on the shorter time frame and move to the longer term time frame. So in this case, the example I'm giving you here, it starts in the daily, it'll change to the weekly, and then the longer term time frame, the monthly, will follow that trend of the earlier time frames, giving enough time. So what it is you really want to be aware of your own time frame. Are you a day trader? Are you a swing trader or investor? Or is your time frame on the yearly time frame, like you have a 10-year time frame, then you're more concerned with what the chart looks like on the longer term time frame. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.